Okay, everybody, here we go. It's me, Gregory Mannarino, Wednesday, November 8th, 2023. Let's start off with this on my lovely pre-market report. So, with regard to consumers that are getting absolutely destroyed by the current environment, just as you and I have spoken about, I don't know how many times over the last whole bunch of years, what happened here. So household debt has now skyrocketed to a new all-time record high, over $17 trillion. $17 trillion. This is the exact scenario that you and I laid out literally from I don't know how many years ago, explaining how the creation of this new two-tier society, this new neo-feudal system would lead to exactly this. Prior members of the middle class are desperate to maintain the illusion of a middle class existence. So what they're doing is taking out every manner of loan imaginable to borrow themselves into some kind of twisted version of prosperity. Can't happen. You cannot borrow your way into prosperity, just like this nation cannot borrow its way into prosperity. What we are doing here on a macro scale, meaning the nation itself and individuals as well, is they're borrowing themselves into obscurity on a scale that we have never seen before. But this is all part of the plan here. Again, central banks in full control of the economy, the markets, the financial system, creating slaves to the system. You understand? So this is no surprise here to find out that household debt, I mean, it's not just household debt. Consumer debt across the board, credit card debt, every manner of debt, all is ballooning. Meanwhile, you have defaults skyrocketing across the board. Again, this goes back to another phenomenon that you and I, multiple phenomenons that you and I said would occur. What's going on here? So, it's very simple to understand this. We have a system that is designed, again, to bankrupt people who are participating in it. And we have no choice but to participate in it. It's their system. It's debt-based. You all know that. The mechanism is very simple. Cause people to borrow. Cause people to become more indebted. And again, dependent on the system. I don't know how many times we've spoken about this. As the current system is being dismantled piece by central banks collectively, they are the enemy, people. I don't know another way to put this. I've been explaining this to you since forever. Now, going back to the banks here, let's talk about the banks real quick. Another phenomenon that is getting literally no coverage here by the mainstream media, and they can't cover it. What am I talking about? Withdrawals. People are pulling their cash out of these institutions, out of the commercial banks at the fastest pace ever. These are bank runs. They are going on. You're not allowed to know about it because nobody knows until everybody knows. So people are getting pretty hip to the current situation here. Where do you put your cash? I've outlined this a million times. Look into a credit union. Nothing is safe. Once cash or any asset leaves your hands and you put it someplace else, there is obviously a counterparty risk. You understand? So, in my view, and I would hope you would do your own research on this, you have to understand how credit unions work. They don't operate for profit. They don't take the risk that a commercial bank does. So, in theory, putting your cash in a credit union is somewhat safer. But again, there's no such thing as zero risk. If anyone tells you they have a zero risk investment for you, you know you're talking to a liar. You understand? There's no such thing. So, we have the situation with the banks is deposits are getting bled out. No loans, obviously no deposits, no deals. This situation is dire with regard to the banks. And the Federal Reserve, what they're going to do is pretty obvious to me. And I've covered this. I'm going to tell you again. All right. They're going to start cutting rates sooner than later. They're going to allow certain banks to load up on debt that is yielding higher than it was obviously on the bad debt that they've already loaded up on. So if, let's say, a commercial bank were to buy debt now that is yielding X and they lower rates, which I believe is going to happen here, this is going to make their balance sheets appear better. And this is a selective process that's going on here. Again, they are consolidating the system. All the stuff we've spoken about is happening here. But the big banks, the Goldman Sachs, JP Morgan, these two specifically ain't going nowhere. So that's how that's going to operate. Anyway, pretty much straightforward here. Let's talk about a couple of other things. Commodities. Commodities are getting hit, but this should not be a surprise to you. I covered this phenomenon, how it would roll out, like last Sunday. In my markets to look ahead, I explained to people what the Fed is doing. They're maintaining a risk-on environment. They're trying to force cash into the stock market to maintain that illusion. So the cash has to come from somewhere. Again, it doesn't fly away to money heaven. Right now, it's coming out of commodities. It's coming out of commodities and making its way into the stock market. We just came off of the best week of the year for the stock market. We just had two more up days for the stock market, the S&P 500 more specifically. And who knows what's going to happen today. Stock futures right now are about flat, slightly higher. But this is the game. The game remains risk on. Risk on means suppressed rates opens a doorway for cash to make its way into the stock market, people. I don't know another way to put this. I've been telling you this for like 1,000 years now. And that cash is now coming out of commodities. But this, in my view, and I would have to believe that most of you who understand how this is eventually going to play out, this is a gift. This is a gift. Risk on will turn risk off. I've been telling you this again for 10 freaking years. Risk off when cash bleeds out of the debt market first. The debt market is the hyper bubble, the monster, the 9 gazillion pound gorilla in the room. Central banks are pumping that right now. A global debt ballooning at its fastest pace we've ever seen. Okay, that mechanism here, inflating the bubble, the hyper bubble in debt, has reinflated the stock market bubble, inflated the housing bubble. You know all this already. Pulled cash out of assets it should be going into. What does this do? It creates distortions across the spectrum of asset classes. You know this already if you've been with me for any length of time. Inverse bubbles. To the downside, massively undervalued assets, gold, silver, platinum, palladium, crude oil. Right now, crude oil, okay, first of all, crude oil is a phenomenon among itself here. Even though crude oil right now is taking quite a hit over the past couple of days, it really has no business being here, but it's going much, much higher eventually. Why? Again, debt market meltdown, rate spike, puts pressure on the stock market, cash just moves out of the debt market, out of stock market, into commodities. That's where it's going to go. It's the same phenomenon we've seen over and over and over again. You understand? I hope you do, honestly. Anyway, so with that, people, I hope you're paying attention to what's happening. War, expanding of wars, hundreds of billions of dollars being created out of nothing to fund the Ukraine war, to fund this Israel war here. Where does this cash come from? Why doesn't anyone question that? That's what drives me nuts. We don't have a war chest. No developed nation has a war chest. The central banks are buying it all. They're providing all the liquidity or cash for the system, but all they're doing is exacerbating the underlying problem. And the underlying problem is liquidity. Liquidity is drying up. That's a fact. It's not just Greg Mannarino talking about it anymore. There's a lot of people who are talking about this liquidity crisis that we're in, but you're not supposed to know that. Again, when you have this mechanism of pulling cash into the now to fund whatever they want to fund, this dollar devaluation, currency devaluation across the spectrum, central banks in a race to the bottom here. Well, you're seeing inflation here. You're seeing this instability in the debt market. All the things you would expect to see are happening. Okay. An economy in free fall. People can't make ends meet. They're borrowing again with the household debt skyrocketing to an all-time high. Debt defaults. What else would you expect? Do you need another clue as to what's going on here? You got to protect yourself, people. You know what I'm going to tell you. Bet against the debt. Become your own central bank. We're never going to waver from that. Hold hard assets. Physical silver, my favorite asset of all time. I think also, again, look, I'm going to tell you this, and I know a lot of you are going to hate to hear it, but I don't care. I believe you need some cryptocurrency in your portfolio. You got to set yourself up for where this is going to go. Commodities. are going to skyrocket eventually, including obviously gold, silver, platinum, palladium, crude oil, everything across the board. And it's going to move into cryptocurrencies. It's going to move into artwork. It's going to move into classic cars. Cash just looks for places to go when the game turns risk off. So this is an opportunity for you and I to put ourselves in the right spots, which we've been doing for quite a long time. I think those of you that have been with me. All right, anyway, look, I think I covered a lot of stuff here. Important video. Please share it. Please get it out there. Those thumbs up are very important. Lets the algorithm see that people like the video, so they show it. All right, with that said, I will see all of you later. 4:05 p.m. Eastern Daylight Time for the live stream. I hope to see you there. I want more people to participate in that. Okay, I love the live stream. I get to interact with all of you. And it's a lot of fun for me, honestly. All right, I'll see you later, and well, that's all.